Hey everybody, hope you're doing well. It's Lane here with MetaShackle. Today I want to show you something very interesting. This is something that a lot of traders don't realize, but it's something that I've known for quite some time and have been keeping an eye on. Now, I don't trade a lot of these moves until the New York session opens, but there are times where I'll put moves on during the London session, anticipating that it's going to travel straight through the New York session in the same direction. Now, this is the XRP charts from the last couple days, and you'll notice right here I have 4 dots on the chart. Now this right here represents the London Open at midnight, and this is New York time, but I have it set for my time code. Now this represents midnight, and this dot here represents 3 o'clock in the morning. So you'll notice what happens is the direction of the market generally moving into the hour and a half before the London Open. They will move the market in a direction that is opposite of the one that they want it to move in. So you can see right here that the price came down. There's an order block of sorts in this area, then they moved it up. Well, what they were doing is they was anticipating moving the market downwards. So what they did is they reversed the course of the market here, brought the market up. So this right here is where all the market makers and institutions are putting their position on. So all their stop losses are going to be up in this area. Not that they really need them. But then what they do is they move the direction of the market in the opposite, because they're basically going short right here. So once the market opens, you get a nice little order block right here where everybody stacks and gets in. So what happens is they move the direction of the market in the opposite. Now what happens is retail starts buying long here, and anyone that's going short waits for this order block. So you've got all your short positions here. So all the longs are coming up here. Then they reverse the course of the market because all their stops are up here, right? So they're basically not going to get touched. Then they start to bring the market down towards the close. So what happens is all these traders here get stopped out of their positions. Now the shorts here are still making money. Now this is the close of London. So what happens is here is the open for New York. So what you see here is New York session essentially is going to do the same thing. They're going to move the market in the opposite direction. And a lot of times they will continue the move of sorts for the London times. So what happened here is they brought the market down. You get this order block of sorts. So this is basically where all of the hedge funds and everybody, the institutions, they're putting their long positions on right here. So now all the shorts right here, they're going to use all that liquidity as these buy back to cover. They're going to use all this liquidity and get that momentum because they're all going to buy. So they're going to compile that buying momentum to move the trajectory of the market. This represents the open at 5. This represents the close. So now look what happens towards the close of the New York session. The market starts to move up. So you get this little bit of a hiccup right here around the close. So what happens is you've got all the retail stops up here. So what happens is New York, all the traders that have their positions in play basically bring that level right above this level where they had all their stop losses, and it knocks out all the stop losses right here for retail. But all the institutions and everything from London that are still short at this time, all their stops are up here. So their stops don't get touched. Notice how they stopped the price right before it hit the stop losses for the institutions and hedge funds in London, but retail gets hammered. So they trigger these stop losses and bring the price down. So what do? When they bring the price down here, they're knocking out all the traders that are right here because they switched their position from this candle to this candle. So they were long with their stops here, then they switched short and put their stops up here so they're not too far from the stops that are in London. Then they drive the price down. They take out all the stop losses that remain in this area right here, which reverses the trajectory. So now another thing that you'll notice, let's see, I do believe it's on the 5-minute chart. So we'll go to the session for this morning, last night. The first thing you need to notice is right here on the 5-minute chart, a volume imbalance formed right in this area. So you want to mark these out, especially the big ones that are towards the bottom and the tops of the ranges. So this volume imbalance forms. XRP price is forming a nice little wedge here. So it breaks out of the wedge, and as you know, if you're a trader, a lot of times these breakouts, what will end up happening is they'll come back and retest the lows of the breakout. So not necessarily this wedge trend line, even though it'll do that sometimes, it'll come down like this and then bounce up. But a lot of times what you'll see is it will come down and retest these levels here, because there's a nice little order block sitting right here. So basically it comes down, retouches that order block, and adds to the position, because these institutions put on such large positions that they can't get them filled at one time. So this order block was partially filled, they brought the price down, and then they filled it again. So this right here represents the London Open. This is the London close, New York Open, New York close. Now pay attention to that, because that volume imbalance that formed on the 5-minute earlier formed because of this order block. Now whether it was buying or selling, there was a huge exchange of shares right here that caused this imbalance. Now it carried through. So by carrying through that volume imbalance, you have a pretty good idea that if this breaks out of here and starts to pull back for a retest, you know where the area is going to be based on this order block and this imbalance. So then what happens is they finish filling their positions. So the market had opened right here. So now exact same thing happens. Heading up into the time of the market previous to the open, the price pulls up. This right here is where the institutions are putting their shorts. They bring the price down. Same thing. Retail gets in right here. So they're putting their stop losses up in this area, which is below theirs. There's an order block right here. Now this reverses. So one thing you want to watch, if you're planning on putting a position on, you want to watch these little doji candles like this. And then here's the order block. So retail gets in right here. So New York opens. Well, all the traders are already positioned. So the market opens right here, right? So everybody goes short. This corresponding order block gets hit by the volume imbalance, which reverses the market course, which means that all these positions right here buying back to cover those short positions, which adds momentum to this move for the institutions. Now, they ditched this short position right here and sold it right here. The whole point of this position was to take the price down so that they could get back to this order block. So then what happens? We get the price moving up right in this area. Another thing you notice is on the 4-hour chart, the price formed another volume imbalance right here, which means there's lots of large orders going through that are causing a price imbalance. So gee, who could that be? Because we're not the ones putting in those big orders like that, right? You know, we're buying $1,000 worth. Those guys are buying a few $1 million worth. So that shows up on the charts right here, transferring over to the 15-minute time frame. So we get to the New York Open right here. Now London's closed. We get to the New York Open. Price is moving up, so it's moving in the same direction as it was from London because these guys work together. So you get this little spot right here. You can see what happened is previous to the open at 5 o'clock, New York brings the price down. So the reason why they're doing that is because they want a discount. They want to get an entry at a discount. So they're entering and putting their stops here. Now they move this price up. It's basically right here, everybody's accumulating. So what happens here is towards the close, we start to get a big move moving in that direction. So the whole point of this whole thing that took days to set up was this order block here, anticipating this breakout and the retest. So they put their big position is right here. Everything that happened here with going short and making a little money on the side, all that is to knock out retail and to generate liquidity moving in the direction that they want the price to move. So what we got to see here, if you look at this chart overall, you can see that it took quite some time for the market makers or institutions to fill these positions. They were filling them here, 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 and here. And the whole point of filling all those buy orders right there, regardless of what was going on right here, all this was just the ability for them to move the price in the direction they wanted it to eventually move. So the whole point of all those order blocks was to get this move right here. So what did this move do? It went up and hit previous highs. It's been taking out all these previous highs, one by one by one by one. And all this entire move, all these jogs up and down and sideways, every last bit of it is to generate liquidity at key points that can be taken out. So when that selling comes in or the buying comes in or the stop losses are triggered, it generates liquidity and moves the market in the direction that they're after. And the whole point of that thing was basically to fill these orders to bring the price to where we are right now and possibly higher. So if I had to take a guess right now, I'd say that we're going to go challenge this high right here because there's a ton of liquidity sitting right here. So odds are this will probably play like this. So it's no coincidence that this volume imbalance is sitting right in this area. You can see the areas of accumulation are hanging out where those volume imbalances are. And that's why you have the volume imbalances, because they're stacking so many orders in there that when it triggers those orders, or those orders are put on, it moves the price in a way that's not indicative of normal market movements. And if you keep an eye on these candles, you can even watch these little moments right here, like when the market was opening right here. You can see that there's a slight internal volume imbalance right here because these candles are not moving with each other. So you know there's action going on right here. It's no coincidence that happened right here, and then the New York session opened right here. So one thing you want to keep an eye out for is these internal volume imbalances and these external volume imbalances. Now you'll notice right here it happens right at the same time. Here's the volume imbalance on the 4 hour. So what happens? We have an internal volume imbalance right here as well, which shows you what's going on. They're stacking orders. Now that's one thing that they can't change. These institutions, they manipulate these markets. They move them in the direction they want, and these guys never lose. These guys will spend millions and millions and millions of dollars to keep their stop losses from getting hit. They will move the market in the direction they desire, and they won't lose money doing it. You're the one that's going to lose the money. So the thing you've got to realize with a lot of these markets is you don't fight the institutions and the hedge funds. You learn to trade with them. And you can see there's a slight internal volume imbalance right here, which means something interesting is going on. So at times when you see these internal volume imbalances, something's going on. So keep an eye. It should draw your eye to the charts when you see those things. So we'll see what happens here, but I see this pattern repeat all the time from the London to the New York. So they'll move the price in the opposite direction, they'll put their position on, and then they'll let retail get in, and then they'll use retail basically as a trampoline to get the price where they eventually want it. So I hope you've enjoyed this video. Thanks for watching. Have a great day.